So Filene, for those of you who aren't familiar with us, we are a think tank specifically for the credit union industry. Our work, like many of the organizations here, is done through the donations of our members. So we have over 500 member organizations, including a few that are in the room today. And our goal really is to bring those insights, that information, that innovation to you. So, we were hearing a bit about how it's hard to find the right fintechs. We have a group called our incubation team. That is all that they do. They are looking at the fintechs, they're looking at the trends, they're trying to understand which of these partners do we need to elevate. And every year they actually pick 6 of them, and our member credit unions actually test them. We have lab reports and we share out. So when you're thinking about, we don't have the capacity, we don't have an innovation team, we can't be doing that scan. That's some of the work that we do. And then on my team, the research team is another big part. If you've seen our white papers, that's all coming through the work that my team is doing. We pick 6 umbrella topics that we study for 3 years. So we're going to talk about credit union of the future. We have a center that is called Next Generation of Member Growth that is specifically focused on mostly Gen Z. I'm a millennial, and at some point during the creation of the center, I got old, apparently, and they decided we were less interesting. So we're very much focused on Gen Z, even Gen Alpha. The conversation about financial education, financial literacy is coming up in that. And if you want a sneak preview, we're gonna have a center on well-being that we're gonna announce soon. So that real focus on financial education, financial literacy, but how credit unions are really doing an amazing job of thinking about the whole person, the whole member, mental health, and all of the things that are going to go into that are going to come into this. So anyways, if you are interested, I would love to talk to you more about Filene and all of the things that we do, but we will focus for today on shared services. So this work, like I said, this was done through one of our centers, Dr. Lamont Black. If you ever go on LinkedIn and see someone talking about AI and credit unions, it is probably Lamont Black. He is our fellow for this center. He did this research in partnership with MDC, who's another partner of ours that we do work with quite often. So we're going to start off what are shared services. I'm going to say most of you could probably do the first couple of slides of this, but we'll just lay the foundation, have a shared understanding of what we're talking about. Then we're going to get into benefits and concerns. And what's interesting for the credit union industry is something like shared services. You're not only thinking about this as a consumer of these services, but through the QSO model also being a potential provider. And so we'll hit on both sides of that through the benefits and concerns, and then we'll talk about some best practices. Okay, so a definition. This is the one that someone else could probably do if they wanted. Shared services. This is a relationship between 2 entities that otherwise do not have an organizational tie. So it's a B2B setup. Users share the services, so you are not the only one receiving these services from the organization that you are working with. It could be tied to a technology, or it could be tied to staffing. I will say my own personal bias, when we talk about shared services, I do not think automatically of the software as a service side of it. I think most people's brains go to more of the staffing side, and we'll talk about both of those. And then last, it could be, they support consumer-facing businesses. So many of you, if you think about, a call center type shared service, that's a kind of a B2B2C setup. And just an illustration to drive the point home, this could be your credit union. You could go to one shared services organization for HR, and then another that's doing some infrastructure and collections related activities for you. Oh, it doesn't want to show that slide. There we go. So I'm curious, when MSIC asked us to talk, they said, we know shared service is important, driving that efficiency, the potential to reduce costs through this is important, and we want to reinforce this. I was curious going into it, well, how many of them are already doing this? Where do people kind of fit within these camps? So I'm going to go through these. I'm going to ask you to raise your hands, because I'm not going to make you interact with me too much, but raising hands. I'm curious, first bucket, is anyone doing everything in a house and has no plans at the present moment to engage in shared services? MSIC didn't tell me to do this to out you to them or anything. Okay, so I think I saw no hands. So everyone is doing some level of this. Who is planning for shared services? And you can fall into multiple of these. Is anyone in early stages? Okay, all early, okay, see a couple of hands. Operational, you have the relationships in place, you have the partnerships in place. This is a functional part of your business, kind of steady state. Majority, okay. Has anyone reverted to in-house? Have you unwound a shared services partnership? Okay, couple, all right. Those are the good, juicy stories for later to hear maybe the wrong partners or wrong aspects of the business to go into. And then for those of you with active shared services, which is most of you, are you doing this through a QSO? Raise your hands. Or is it a non, and again, it could be both, because obviously you could be engaged in many. Okay, so a mix. How many of you are offering the services through your own QSO? Not very many. Okay, couple. All right, and so like I said, we're going to be looking at this from both sides, because there is not only an opportunity to reduce cost as a consumer, but the potential to create a new aspect of the business as a provider. Okay, so when we look, this study from Deloitte steps back and looks not at credit unions, but at all organizations, and looks at, what are the most common aspects of the business that are engaged in shared services. And probably not surprising, the number one that we see is finance. 91% of organizations engage in some sort of shared services related to finance, because again, if you think about the software as a service aspect of things, that gets a lot of people. We then see HR, IT as what they call their big three. And then it fades off a little bit, procurement, tax. Customer service, lower than I would expect, but that could be because many industries don't have a customer service aspect like credit unions and other service type industries have. And then down for the rest. Do you think if we did this study this is not the next slide, so this is not going to be a reveal, but do you think this would be the same for credit unions? Or do you think you'd see a different ordering? You think IT would be up higher? Yep. Yep. Yes. Yep. Bethpage now 4-leaf, I believe. Soon. I don't think they've changed officially anything yet. They are a sponsor of Next Generation of Member Growth, actually. So I think, but I think that they are still we see commonalities. And because part of what we'll talk about is you'll also see commonality across industries. So, everyone has a finance department, everyone has an HR department, many industries have customer service. And so these things are common, and we see these software as a service or these large companies that are providing a lot of these. So the ADPs, the SAPs, the Salesforces of the world. And sometimes, especially as the customer or the member, you may not have any idea that you're engaged with a shared service because it's a white labeled experience. Okay, so where's the opportunity on the provider side? Because what MDC was looking at and their motivation in this, Members Development Corporation, they come up with solutions for the credit union industry, and they wanted to know, is there a potential beyond what currently exists with what QSOs are doing to provide more? And so again, stepping back and looking at the US overall, not just credit unions, where is the opportunity, where is the projected growth of the shared services market? And you can see from this 17% almost year-over-year growth. The growth is exponential. And from 2023 to 2028, the growth is expected to be $284 billion. So there's a lot of potential, thus the study continued. When we think about shared services too, as a provider or even as a consumer, we're thinking about the value model. When you look at where shared services initially took over and where it's most common still, it's in more of this value preservation. It's in the effectiveness, it's in cost reduction. That's mostly where this conversation starts and mostly where we see initial shared services taking place. But what we want to see, and when you think about finding a provider or being a provider, it's about going up that value chain from just preserving value to actually creating it, getting to the point where you are providing back more to the organization than they could do themselves. So not just that cost savings, but actual true value beyond that. Okay, and so I've already teased this. We're going to look at it from two lenses. You'll see sometimes we'll talk about at the top, what do providers need to be doing? But if you have no intention of ever being a provider of shared services, I think it's very easy to flip these on their head and think, okay, well then if I'm going to a provider of shared services, if I'm looking to a QSO, if I'm looking to this organization, what are the standards that I should be looking for? What are the questions that I should ask myself when I'm assessing the right partnership? So what do we think? What did they think about all of the benefits? Obviously, scalability. So you are able to do more with less. As part of this, it's a better way of doing business. You can grow the business through shared services. Evolutionary focus and acceleration. You can look forward. You can redistribute your funds elsewhere as part of this. And lastly, enhanced talent acquisition. And I think that this is really interesting. And also, if you think about the conversation around AI right now, this will sound very familiar. If you are taking the tasks and the jobs that are very routine and placing those elsewhere, then you can look at for your staff, how do you elevate them into positions where they're really doing the thoughtful work, the more impactful work. Okay, but of course you can't have, we're not going to end on a bad note, but we have to have the other side of things, because obviously this model isn't perfect or everyone would just do it. So what are some of the key concerns that were considered as part of this? Maintaining identity. This is a huge part of it. You care about your members, and if we're talking about outsourcing, your call center, you don't want people to all of a sudden have this very different experience than they have if they were to come into a branch and talk to one of your employees. So thinking about that and how that shows up and how you find a match for your organization is really important. Serving different size credit unions. You talk about a shared service that could be serving a $10 billion credit union or a $100 billion credit union. How do you strike that balance, and how, either as a consumer of the service, do you find an organization that's truly a fit for your scale? Or on the other side, if you're considering being a provider, so talking about the Beth page, we're talking about big credit unions coming together to do this. Core support and segmentation, depending on what the service is, the variety of cores that it could be talking about supporting, and then misalignment of CEOs and boards. I love this topic. We have an entire center that is just talking about leadership strategy and governance, really just talking about governance, because it is so important, the role of the board and the relationship of the board and the CEO in making these strategic decisions. And that is something that often comes up. Either the CEO wants to do it and the board doesn't, or the board wants to do it and the CEO doesn't, and how you find that alignment in strategy and mission to do the work. But one of the biggest points that came up and that we talk about is, how do you ensure continuous quality improvement when you are no longer either the one who is doing that work, or if you are the one that is now providing that, how are you continuously improving the quality and moving up that value chain? Okay, so like I said, we're going to talk about this as a provider. Pretending you're all putting your hats on now and you're saying, we think we might want to start a QSO that is providing some shared service. What would you want to consider given what needs to be done, the different considerations about how shared services organizations exist now? But like I said, if this is never in the realm of possibility for you, you can think about it from, okay, then what does this mean for our credit union that may want to be a consumer of shared services, and how we would assess potential partners? Okay, so we're going to talk about these 5 things. So, always starting with the obvious one, you need to solve for a shared need. You could potentially specialize and outsource too. You could focus on multiple industries. I would say not quite as relevant for credit unions, although it could be. You have to deliver on more than cost, getting into that value conversation, and you can do things that are more routine in that bottom of the value chain and where a lot of shared services start, or you can look at complexity, but there are considerations for both. Okay, solving for a shared need. This is obvious, right? It's called a shared service because you are doing something that is common and shared across the organization. It is a common need of different organizations that you are able to provide. What's important, though, is it needs to be something that you can provide in a fairly standardized way, because if you are a shared services provider and all of a sudden you are customizing this for every single organization that you're providing it to, the ability to reduce cost and be more efficient than that organization was dramatically goes down. So you need to meet a shared need across your customer base, and it needs to be something that is efficient and solving a common problem. So when we look at shared objectives, in terms of both the objective that was identified and the objective that was achieved, I would say we see a fairly good mismatch. These bars are basically all near each other when you look at these different objectives. But it is interesting to see, standardization and efficiency of processes was something that was identified, but not quite achieved as much, whereas reducing cost actually outperformed the expectation based on the percentage that identified this as an objective. I actually think this is pretty impressive, the one on the end. Only 36% identified business strategy and plans as being an objective, and actually 20+% more actually found it as an outcome. So just thinking about the potential, and when you're thinking about the value proposition, either as a consumer or provider, some things to consider. So point number one has to be a service that can be standardized. Number two, it can be something that is, you can outsource and specialize as well. So it doesn't need to be that as the provider of shared services, you are doing all of the services yourself in-house that you offer. It is very common for shared services to specialize or outsource as well. That could be because there's an organization that you could contract with that will do it better, do it faster. They have more subject matter expertise, or it could be because despite being a shared service, actually having a local presence is very helpful. I think one place that we often see this is with IT. You could outsource all of your IT support, but actually having someone on site to support your staff matters. So although you are engaged in shared services, you have someone who is local but employed by that organization. What's interesting when you look at that, you could specialize or outsource. What we tend to see is that shared services organizations do not try to do everything. They tend to focus on what they're good at. So this looks at how many different functions does a shared services organization provide. And for the most part, we see less than 4. So 68% are in the 1 to 2 or 3 to 4 category. You see very few that are trying to do it all. And I would imagine as we look at QSOs that are shared services organizations within the credit union space, it is probably very much the same as well. Although when we get to the end side and you see what MDC is considering doing, it gets into a slightly higher number. So you can consider, although you are the provider, you can consider within that subcontracting or specializing. You can focus on multiple industries. They were doing this, they were trying to stay somewhat agnostic because they wanted to see what was going on outside of credit unions, because shared services in certain industries are much more advanced and much more uniformly adopted. And when you think about other highly regulated spaces like healthcare, you can't, even though everyone has HR, everyone has this, everyone has that, it can still be helpful to go to someone who has expertise in that area. And so as a provider, thinking about that sort of expertise and that knowledge that comes with the industry that you're in, you may, if you are looking at something very common, you could be a credit union organization that decides to serve other industries, or it could be that you stay in your lane because this is very much what you know and the regulation you're familiar with, and your ability to specialize and provide something beyond what a generalist shared services provider is important. Okay, so thinking about whatever the services that you would provide, thinking about, is that industry specific or is it something that really cuts across industries? Delivering on more than cost. We have hinted at this. I would say that when shared services were new And where most people started with them, it was a cost play. And even still, when it's talked about, when we presented it here even and started talking about it, obviously that is a starting point, and most people go into it with the hope or expectation that at a minimum it will reduce cost. But as it's becoming more pervasive and as there's actually more competition within the shared services space, you have to think about what else can I provide or what else can I expect as a consumer of those. And so thinking about not only cost, but also quality and strategic impact. So the ability for that service to do more than just do what you were already doing, but for less money. So moving up and being able to, drive innovation, drive process improvement, those sorts of things beyond what you were already doing. And this model looks at the 10 dimensions and it buckets them into those 3 categories. So down on the right, we have cost. So that's the basic expectation. You basically have to tick that box in some way if you are either going to provide or consume these. And then we get into the more strategic side of things and the quality. So thinking about how, again, as a provider or consumer, how is that box being checked? How are you providing or getting that additional value out of that organization? Okay, so value proposition. We actually talk about this a lot for credit unions in general. Do you know your value proposition? Do you know how it's distinct? We talk about younger members. I love that it was brought up that I'm going to use we even though I'm not that young. We're like our grandparents. We care about community. We care about people. We care about knowing that your values in some way align to us. That sort of value proposition. Within shared services, thinking about how are we hitting on the topics of cost, quality, and strategy as we're assessing or thinking about creating a QSO. And then I believe this is the last one. Ranging from routine to more complex. So again, routine, those are the things that are being replaced by AI right now, if we're being honest. So these are the things, this is batch processing. Some of this was replaced by robotic process automation. It's those types of tasks that there is, as soon as you know the rules for it, you can do it again and again and again. What we see is that we're also moving more into much more complex tasks that can't be automated necessarily, although with generative AI, the amount of things that can be automated is going up every day. So, it has to be thinking about, can you do this in a way that justifies the cost? So providing that, additional value that comes from outsourcing those more complex tasks. So thinking about staffing, internal versus external reliability, the redundancy, scalability, and cost. And this is a good example. So this takes, on the x-axis, we're looking at ability to manage services with current skill sets. So if it's high, it's relatively easy to keep in-house. If it's low, if it's high, it's relatively easy to potentially outsource. If it's low, it gets harder. If it's on the y-axis, we're talking about complexity. Lower complexity, easier to outsource. Higher complexity, potentially harder. And you see that you get these bands from routine to more complex moving out, and that also aligns with where we see different shared services falling. Okay. So thinking about this one, you need to help, whether you're on the provider or consumer side, you need to help people think about, does this make sense for my organization to engage in this, thinking about things like complexity and staffing. So moving totally to the side of consumer, when you're evaluating a shared service, what should you be thinking about? And we've gotten into this, and we'll look at a very simple example of how this plays out. So does our staff need this service? Do our customers or members need this service? Does it provide a competitive advantage? Can someone else do it better or cheaper? Does it provide economies of scale? And does it provide a deeper level of service? So if we take one of the common examples of a shared service, HR. We have two scenarios here, and I think the next slide has it written. I'm going to give you the written version because the other one's very hard to see on these screens. So this is very simple. Take the example of an HR, this toy HR department that we have. It has 4 employees. They're paid $110,000 a year. You are paying $440,000 for HR. If you, in the shared services model, if you decide in that case you're going to retain 2 people in-house, you still want to have that support, you want to have that staff for your employees to be able to have someone to go to. They can also do the things that are more complex and deal with anything that is, that you wouldn't want going outside of the organization. But then those other 2 positions, rather than having those people who were probably doing a lot of the more HR processing side of things, if you then outsource that through fractional employees at the shared services provider, you could get access to 100 employees, but you are only paying $1,000 a year for them because, again, it's fractional. So in that case, we're talking about 2 times 110, so 220,000, but only 100,000 for what otherwise was another 220,000. So you're saving around $100,000. And that kind of thinking of, that's the cost side, but also thinking about from those 2 roles that you've now converted into a fractional 100 employees, are you getting, in addition to cost, are you getting specialized knowledge? Are you getting better support? Are you getting things that make it worth not only that cost savings, but also any potential other issues with letting 2 of your staff go? Okay, so insight recap, thinking about being a provider or thinking about being on the other side of things. Identifying shared needs, specializing or subcontracting, thinking about those industry-specific considerations, and if it is industry-specific or industry-agnostic, and then delivering on cost, quality, and strategy. And so where MDC wanted to see this is, does the opportunity, does the current situation open itself up for a potential, what they called a super QSO, which is essentially a QSO of QSOs. So this is their thought, taking into account all of these different insights and the way of putting together shared services that balances these more generalized services that are more focused on cost reduction with the ones that are more focused on specialized services. So what this does is it essentially embeds a number of QSOs within this super QSO. So from this model, you can see, although this one super QSO provides 5 different services, they would potentially provide, say, 2 in-house, and then they would delegate out, subcontract out to 3 other QSOs that have specializations in these other areas. Now, the benefit for this, and what's different than if a credit union was just working with 5 different organizations contracting themselves, it's a single point of contact, single neck to choke, whatever that horrible saying is that people say. But it's intended to provide a better service. You're not working through vendor selection. You're not working through contracting, procurement, all of that. The super QSO is doing that for you and ensuring that you are getting the value and the benefit of them being the ones to ensure that quality improvement, them being the ones to ensure the cost reduction. And so that is their working model for where this has the potential to go next. Okay, so implementation steps and future opportunities. So thinking about things that can be standardized beyond just what is done now, shifting from cost reduction to value creation as you're thinking about future QSOs or future shared services. I think the future opportunities get into an interesting space, and I actually think the idea of shared services in the face of AI and how much that's disrupting a lot of similar types of jobs and work is really an interesting thing to be thinking about and a space to be in. And like I said, the professor who worked on this research is also a professor who works heavily on AI. So he's thinking about, if it's one or the other, if you're talking about a fintech that could replace or be doing this work at a lower cost or shared services, which model really makes sense for you to take part in? The potential for QDEX, are people familiar with QDEX, the Credit Union Data Exchange? Somewhat? Of course you are. So one of our research centers was called the Center for Data Analytics, and one of the biggest insights that came out of that was even the largest credit unions are not large data-wise compared to even a mid-sized bank or the largest banks. And so the disadvantage of the credit unions is that individually the amount of data and the power of the data that they have from their members is relatively low. But as cooperatives, there's the potential to bring all of that data together, and then you get something that has much more power and scale than the banks. So working with Trellance, we've set up the Credit Union Data Exchange, and that's exactly what it is. It's a sharing of data. So that's a potential way of thinking about shared services, but instead of shared services, shared data. And there are some services that go along with it. Open architecture, and then long-term potential. What does that look like? Again, with AI and some of these things that are disrupting a lot of industries, what does that mean for the potential on the cost reduction side? And then what does that mean for the need to drive into greater value creation? All right, so conclusion. Well done. I think I stuck to my 40 minutes. I didn't bring my phone up here to check. So thinking about efficiency through economies of scale, focused expertise, and then, of course, risk mitigation, staying true to who you are through these partnerships, through potentially creating a QSO yourself, so that this is, ends up being a positive experience on all sides. All right, thanks everyone. Any questions on shared services? Or any of the work we do? I'm happy to field anything. All right, thank you.